Okay, so we're doing one thing before all right, well, here's our follow-up. This will let us, take a look at these things, see if you're doing them. The whole point is just to help you continue on this journey to preparing for freelancing, refining your plan, finding a partner, reviewing your LinkedIn case studies, website if you have one, writing a script for a video. Everyone hates doing that, but I think it's a great step. One, because it helps you, in a 1-minute video, you really have to decide who you are and what you're offering. But it's also just a great, quick way for people to get to know you. So I recommend you do it. Write the script, and then you can think about, when you'll record it, where you would put it. On your own website would be a great place to put it. But if you don't have a website, then there's still some other options of where to put it. You can post it on LinkedIn, etc. Okay, so onward to tonight's content. Okay, our agenda tonight, just for an overview. First, we're going to talk about completing a request for proposal if you've received one. So I want to give you an experience in doing that. And then we're going to kind of dive into the legal things. If you set up an entity, which one is right for you? What are the considerations between the entities? Why do you want an entity? Contracts for hourly rate or fixed bid, managing collections and disputes. And then finally, we're going to watch a recording of a guest from a previous session, John Thompson, a freelance lawyer from New York City. Okay, so onward. So first is this bidding. So I'm just going to share with you right now a request for proposal that I received about this time last year. And it's a very simple one. So it's a great one to start with. So here it is. Let's take a look. Here's their research objective: to gain an understanding of the platform's mindset, needs, and technical capabilities regarding providing a payment solution to their merchants. So this is a merchant payment solution not based in the US. I don't think I'm going to tell you who it is, but anyway, we'll see if it comes out. Target audience, B2B merchants. What are they requesting? 10 to 20 in-depth interviews of 1 hour around the world, primarily in the US, but including other countries. The timeline, November and December of last year. All interviews conducted in English. So that gives you a sense of the scope of the project: 10 to 20 interviews, B2B customers. And this is the last page of the RFP. What do they want from you? A research plan with a discussion guide. They will provide questions. You conduct these interviews, and then you analyze the data, summarize, and report on it to them. So that's the scope of this project. And I'll make a copy of this and share it with you, so you can think about it during the next month until our next session. So our final session is in December. And between now and then, I want you to prepare a bid on this project. And of course, you may not have an idea of how you're going to do that, but this is a practice proposal so that you can get an idea before you have a real live one. And once you do your bid, we'll start our session next month by reviewing 2 bids from Real Researcher. First, reviewing your bids, anyone who does one, and then reviewing bids from 2 researchers who this was submitted to. And you can see what they bid. And that'll only be valuable if you already did your own bid. So you need to decide, for example, are you going to bid hourly on this? Do you just want to say, I'm going to charge X per hour for however many hours it's going to be? And then, I mean, typically in an RFP, they want a final number from you. So you can't just say, I'm going to charge X dollars per hour, however many hours it takes, because they're sending this out typically to various people and they want to be able to compare the bids that they get. So usually you have to say X dollars an hour, and I'm guaranteeing that I can have the work done in X number of hours. Or you can just cut right to a number and say, I'm bidding X dollars for this project. So in either case, it's good for you to go through, well, how long do I think these will take? How much am I charging? How much do I think, how many hours is the total going to be? Anyway, so I'll send you this. It's very simple, as you can see, but is going to make you figure out how you would prepare a bid. Okay, so any questions with that? By the way, there are a lot of questions to be asked here because there's a lot of information missing. For example, who's going to find the participants? Do you have to recruit your own participants? Anyway, there are a lot of unanswered questions here, and that's part of the challenge, is you just have to fill in the blanks and come up with your bid. But anyway, anything anyone wants to ask at this point? When something's not said, you better just assume you're going to have to do it. And then you can include it in your bid. So you can assume you'll recruit the participants based on whatever they're looking for. What software will you use for this? Is there some platform that they use to record these interviews, etc.? If it's not in your bid, you should include that. Any things that are ambiguous, you should include in your bid and say, if you're providing the software, no charge. If I have to do this, if I have to find the software to record these sessions, I'm charging X. So you should be able to highlight the missing items and then include them in your bid so that they're not a mystery. You don't want to leave them a mystery. You want to spell it out one way or the other. Okay, awesome. Any thoughts about that? I think you've entered slide mode, which is just sitting back listening. All right, well, I'll go on. If there's nothing. Okay.
I know,
so, Bernard, please.
excuse me, yeah, sitting back, listening, but it's very, very interesting. So please go on. I'm sorry, I don't have any question for now, but it will come. Please continue. It's very good. Thank you.
Bernard, I thank you for that encouragement. Thank you for helping me feel like it's valuable. Okay, I was just glancing at the chat. That's a place I can I don't check it often enough. Okay, so here's probably the first big thing we're talking about tonight. If you're a freelancer, do you need to create an entity to do freelancing? If so, when and what one? By the way, when we say an entity, each of us, an entity is something separate from you, a company apart from you. And so, so that's what we're going to talk about for a minute here. What considerations are for doing that? Why do you want one? The biggest reason is protection from liability. If something goes wrong, if you don't have this protection, then whatever goes wrong in your business can cross over and take your personal assets to pay for whatever the problem has been. So your home, your savings, your cars, whatever that might be. So people are very interested in protection from liability. Next, tax advantages. There are some. So we'll talk about one of the basic strategies tonight, but there's some tax advantages. Third, just to look professional so that it's not just me, myself, and I doing research. That's a real thing. And then what, those are the things you want. Ideally, you want it to be inexpensive, easy to set up. You have to hire a lawyer. And then low maintenance are the things every year that you have to pay once you set one up. So those are all considerations. So we're going to start with a sole proprietorship. And a sole proprietorship means you are choosing not to create an entity because you are the sole proprietor. So you don't have a separate entity that you're creating. So let's talk about the aspects of that. You're doing business as yourself. You can operate in your own name, but you can also choose what's called a DBA, or doing business as. So you can also have a professional name like, oh,
Excuse me.
bless you, Janine. So your professional name could be, anyway, what you don't have to operate in your own name. It can be, Reem, I'm thinking of you, Canadian Research Insights or something. Okay, so, and when you do that, you have to file a fictitious business name, if you're operating your own name, then there's nothing fictitious about what you're doing. But if you create one of those business names, then usually in your county, you file a statement that says, I am beginning to do business under this name, Canadian Research Insights. And that kind of notifies the world that you are connected with that business name. Of course, nobody reads those publications, but anyway, that's a notification to the world that that's happening. Okay, so this is the simplest way to do business, and it's the way most people start. Because you probably don't need an entity to get going to doing business. I mean, we're going to talk about the other possibilities, but sole proprietorship is the way most people get started in doing this, and probably the recommended way to start. All right, so let's just go on to the other options. Now, sole proprietor is the easiest one. Corporation is kind of the hardest, most formal one. So let's talk about that. Corporations are governed by state rules. Now I'm talking about the US here, and Reem, it's, maybe provincial rules in Canada. So a corporation in California is governed by different rules than Delaware or New York City. But here are the general ideas. A corporation has a board of directors. You can determine the size of the board. It can be small. Often they have a dozen. Big companies sometimes have 20. They have meetings, formal meetings of the board. They keep minutes. They have bylaws, which are how the company is going to operate. And the board has to ratify important decisions. So if you're going to do, here's my borrow money. You can see these things are all too formal for a researcher working on their own, right? You don't need a board. You don't need minutes and bylaws and board meetings. But anyway, so corporation is the most formal possible organization type. Here's the thing. In Canada, it's the only thing available. If you don't want to be a sole proprietor, this is your next option in Canada. And there's some simpler ways of running corporations, but in the US, there's another option that we'll talk about. Anyway, so what's the big deal? A corporation shields your personal assets from business liabilities. So let's say you're doing this study that we just talked about at the beginning on 20 participants, and somehow there's a data breach. Like they've lent you they shared a database with you of 1,000 participants, 1,000 customers, and you get to choose 20 participants, and somehow you lose that file. It goes public or something. And now this very confidential information on 1,000 customers has been revealed to the world. Well, if you get sued by them and you're determined liable, if you don't have a corporation, you can, your personal assets can be seized to pay for that liability. But if you do have a corporation, it stops with the corporation. And whatever they sue you for $1 million and they win, well, if your corporation only has $1,000 in it, they can take the 1,000, shut down the corporation, and that's the end of it. They never come to your personal savings, your home, your whatever other assets you might have, jewelry. Okay, so corporations work, they can fulfill that purpose of stopping the liability. In the US, there's an appealing alternative to a corporation, which is called an LLC, or limited liability company. It offers protection like a corporation, but it's a lot less work. No board of directors, no meetings, minutes, bylaws. A single member LLC, so you can involve as many people as you want, up to 100 or something in an LLC. But a single member LLC is super simple to set up and doesn't even require an operating agreement, which is kind of the corollary of bylaws. Okay, all right, Bernard, I'm going to answer your question in a minute because it's a great question. LLCs, they're easy to set up. You can do it yourself. You don't need an attorney. It usually doesn't cost much. I just heard it. Oh, our guest tonight tells us that it costs $50 in the state of Wyoming to set up an LLC. Incredibly inexpensive. And sometimes there are maintenance costs as well. In other words, each year you have to pay a small fee. In California, that small fee is $800 a year, which is not small. Thank you for the laugh, Janine. Okay, sorry about that. So an LLC is a pretty reasonable alternative to a corporation. It provides the liability protection. It's not too much work. You can do it yourself. It's inexpensive. So when do you need one? So when, at what point should a sole proprietor set up an LLC? We'll get to that as we go on. You can set one up at the very beginning if you want to. But for most people, if they're freelancing on the side, they usually just stay a sole proprietor. But we'll talk about some of the events that might make you want to become an LLC. Okay, so a couple other considerations. So if we're protecting ourselves from liability, how risky is UX research work? It's extremely low risk compared to all other businesses out there. It's very low risk. The chance of your being sued as a researcher is extremely small. So I've got a couple of possible scenarios that maybe your former employer, well, if you're doing it on the side, maybe your employer sues you because you're violating your non-compete. Maybe you've signed an agreement that says you won't do freelance work on the side and you get sued for that. The damages for that are going to be very small. Generally, the employer is just going to want you to stop doing what you're doing. Maybe they're going to accuse you of violating a non-disclosure agreement where you've posted a case study online or something like that. Once again, they're probably just going to ask you to pull it down, but there might be some damages that they would assess. And now this is the big one, which is the one I just mentioned already, is data, releasing confidential data. And so, so this is an area, researchers know this, but this is an area where you need to take real precautions because it's probably your biggest exposure. And your clients are taking real precautions too. So they're not going to share a list of 1,000 customers with you because they're going to expose only the necessary information for you to do your job. So if you need 10, they'll probably show you 10 and that's it. But anyway, generally it's quite low risk. So I don't, so you probably don't need to be concerned too much about the liability of doing research. Okay, Bernard's question was, well, once you set up a corporation, can you hire someone? You can hire someone as a sole proprietor, an LLC, or a corporation, all three. So even if you're operating in your own, without an entity, sole proprietors can hire employees or can hire another freelancer. So you don't have to incorporate to hire somebody else to work with them. And by the way, when I use the word hire, you would probably want to engage someone I guess we're going to talk about this a little later. So we'll go into that a little bit more later, Bernard, but I saw it was a good question. And yeah, something to think about. You don't need to do this to hire, to have somebody help you on a study to work with you. Okay, so one of the other big issues is taxes. So let's talk about taxes for a second. In a sole proprietorship, once again, I'll start with the US. Well, it's actually the same in Canada. You don't file a separate tax return because there's no other entity to file a return for. It's just you. So you file, in the US, you file a Form 1040. This is federal. And then there's what's called a Schedule C. And the Schedule C is where you put your profit and loss from your business. So it's very simple. You don't even have to have a second tax return, just your one normal tax return. In Canada, the same idea, the T1 general form, and then a T2125 for business or professional activities. And you can write off business expenses. Even if you're a sole proprietor, you can write off all of your business expenses. So if you travel to a conference, if you buy supplies, if you spend money on marketing, all of that is deducted from your profit, no matter which of these business forms you choose. So that's not the tax advantage of being a corporation or an LLC, because you can write off the same. Okay, I was about to say you can write off the same things with everyone. There are a few differences that a CPA can tell you about. There are a few things that you can't write off as a sole proprietor. The treatment, for example, of health benefits is different between the three, but most of your business expenses you write off the same way. Okay, so corporations and LLCs are a separate entity and generally require a separate tax return. The government wants to know what happened for you personally and then what happened for the business. So that's where they become more expensive. Often you hire a CPA to do it, although you don't have to. And, it can be $500 or $1,000 for a small return. Of course, these require annual renewals and fees. So you're starting to see it's a little bit, there's a cost to setting these up. And if there's not an offsetting benefit, you probably don't want to do it. Or you don't want to do it until the benefit exceeds what the cost is going to be for you. Okay, and I'm going to say one other thing, which is we talked about this idea of a single member LLC, meaning it's just you. You're the sole researcher and you've set up this LLC that's just for you. In the US, they're considered disregarded entities, meaning they know you're just operating as a sole proprietor and this LLC is protecting you from liability. So you don't need to file a separate tax return. So that's pretty sweet. One of the biggest disadvantages you can eliminate right there. You don't have to be set up file a separate return for it. You do, of course, need to keep separate books and know what the business income and expenses are, but those can go on that additional federal form, in the US, or in Canada, the other form. Schedule C in the US, and Canada, the T2125, I think. Okay, so you've got to keep those separate records, and we'll talk more about that next week when we're kind of talking about bookkeeping. Okay, so then what's the big deal? Where are the tax savings? Because you can write off the same things with all three, with a few small exceptions. So what's the big deal? Well, here's one example that I'm just going to show you, and I don't want to go, I hope I don't confuse you or anything, but so this is just a US example, but if you're an employee and you're being paid $150,000, I'm going to turn on my little laser for this. So you're being paid $150,000. Then your employer has to pay these FICA taxes in the US, which are Social Security, Medicare. You each split them. They pay total, they're 15.4% or something. And so you each pay 7.5% roughly of these taxes. So in addition to their wages, they have to pay the government $11,000 because they're based on wages. These taxes are based on wages. If you're sole proprietor and you earn $150,000, okay, I didn't really explain this carefully. The employer pays half, you pay half. You each pay $11,000. They deduct from your wages $11,000 and report it for you. And it comes out on your W-2 at the end of the year. So total, you're paying the government $22,500. If you're a sole proprietor working on your own as a researcher, you earn $150,000. You pay all that tax yourself. If this 150 is all considered wages, that triggers this amount of tax. I hope that's clear. I don't want to be confusing in the least. So now here's the tax strategy. If you set up an LLC, you can say it's not all wages. Some portion of it is wages. Let's say half of it, you're going to say is wages. Well, then you have to pay that tax on half. But the other half can be income to the LLC, and you don't have to pay self-employment tax on it. This is the biggest, simplest, most common tax saving strategy. And so people typically don't do it. Okay, great. Reem, I see a good question. I'll talk about it in a second. So people don't usually do this until they're making, I don't know, 30,000, 50,000 or more in self-employment income, as a freelancer. So if you've got a full-time job and you're freelancing on the side and you're making less than 30,000 a year, it's probably not worth doing this. But so people often do this once they leave their employment, start freelancing full-time, they set up an LLC, and then at that point, at the end of the year, a CPA helps them do this and say, okay, we're going to treat this much as wages. The rest of this is going to be income. It's not subject to self-employment tax. Now, what Reem just said is, but wait, is there a corporate tax? Right. So the issue of a corporation is double taxation, that the corporation makes money and there's tax, that you can be taxed at the corporate level, and then also your tax at the individual level. So that's the double taxation. Both corporations and LLCs can be set up so there's just single taxation. For a corporation, it's called an S-Corp, and all the income just flows to you, and there's no double taxation. And for an LLC, you can choose whether you want it to be taxed like a corporation or taxed like an S-Corp. And so, no, there isn't double taxation. You don't have to pay tax twice. So once your numbers are high enough, or if they got to this point, you can see how to save $11,000, it's worth the hassle of setting up the LLC and having an accountant and filing a separate tax return, things like that. So that's that's a big common strategy. Let me just say, any questions? I don't know. Chime in if you got any question about that, because I'm happy to explain any other part of this.
This is really good, Ray. It's exactly what I was hoping you'd talk about, and I don't have any questions.
Well, thank you for the encouraging comment, Tim. I appreciate that very much. Yeah, I mean, all the tax and accounting, bookkeeping stuff sometimes seems so mysterious, but really this is the simplest of the strategies. And this is, why people do it. This is how it works. Okay, so now we're just going to summarize this section, then we can talk for a little bit. So which entity is best? If you're freelancing part-time, probably a sole proprietorship. You probably don't need to go to the effort of setting up another entity and tracking doing the things to maintain that other entity that you need to do. If you're freelancing full-time, consider creating an LLC at the time that your income starts to warrant that. And frankly, if you're going to start to do it full time, you'll probably get to that point quite soon. You may need to set up an LLC just to prove that you're not an employee, right? Companies are very sensitive about this idea that you might, that some court might say, oh, that was really an employee. They weren't really an official independent contractor. So they might ask you to set yourself up as an LLC just to prove you're not an employee. In that case, if it's a good enough contract, you would do it. You know, if you're going to make $10,000 or, you know, $20,000, it probably justifies whatever you need to do. And then, of course, this little Canadian detail. Okay, so that's kind of a quick overview. You know, probably sole proprietorship until you feel like you need the LLC, and that's likely to be the superior option to a corporation. So I'm going to just stop sharing here for a second and say, you know, questions about that. Has anyone set up an entity?
Like you mean a company, a corporation?
Yeah, has anyone set up an LLC or a corp?
Yeah, I am.
You have, Bernard.
I am.
Okay, well, tell us about it. Any
Well, I've been, and I'm still sometime, but I've been for the last 10, 12 years, a freelance in Toronto. And I remember, you know, one company said, we want to hire you as a freelance, but you need to have a company. Oh, okay. You need to have a business account as well, so we can make deposit of your income. Ah, perfect. Okay, so I went and I set up the company, and most of the time it went pretty well, you know, because many recruiter contact me and say, oh, are you incorporated? So yeah, I am. Ah, okay, perfect. So they just submit my company, and I work for my company. I'm the employee of my own company. Sometimes I felt because there's that old question of tax. Yes, at least here in Canada, I used to work at Intuit Canada.
Mm-hmm.
So I don't know that much about tax, but I know one thing: don't play with them, and they always right. So I know there's genius people there, and so I hire a great accountant. Those who lives in the area of Toronto. Her name is Jenny Lynn, a fantastic person, because there is two type of accountants: somebody who will charge you a whole lot of money just to review. They say, all I want is your credit, because you have a credit card for the company. So just send me your credit report, and that's it. And they will charge you $2,000-$3,000 just to check your credit report and provide an income tax report for your company. I felt it was a bit a lot, but Jenny, I remember she filled my tax, and in Canada, I think it's good, fill your tax every year. So you stay out of trouble. You never know what's happened. The government need money, and they will, you know, hassle you, do your tax, and if you're late, you pay interest and so on. But I did all my tax. But Jenny has a wonderful way also to explain this all things I didn't know about, the company and the letter to the director where you say your income and so on. It's very, it's very well done. Highly professional, and I had the peace of mind. So when everything was done with my tax and my own salary, pay and everything, all was just fine. I like peace of mind in this kind of detail. That can be very, and in a way, it's my personal experience at Intuit Canada, where you have tax inspector telling you about use case. I was researching about use case, and we could do a series on Netflix. And like, something scary. So, okay. Anyway,
Okay,
that, yeah.
Bernard,
But it's great experience.
thank you for sharing your experience. That's so
My
valuable.
pleasure.
And Jenny, I'm gonna reach out to her and see if she wants to be a guest and come on and talk. Our last
That
session
will be
in December.
nice. Yeah, we can check it out. I don't know, but she's a very no, she was very good. I recommend her. She's taking care of her business. That's what I like with people. You know, I'm the accountant. I take care of my stuff. Don't worry. That's what we pay for, because I work at Insuit Canada, but I'm not an accountant. I'm not a corporate accountant. That's a whole world, you know. So and you need to pay attention, because one mistake and poof, $5,000, and you have to pay now. Don't wait. Yeah.
No, that tax stuff is scary stuff. So I agree. It's nice. It gives you peace of mind to have a professional.
Yeah. We pay for peace of mind. And she was there, and I remember, I will finish on that. There was a mistake, and I cannot explain you which mistake, but it was not my fault. I'm not a neglective person, so everything was fine, but there was a mistake. The person called me out of the blue from a revenue agency in Canada, and I had no idea what he was talking about, but I remember at the end there was an amount. It was a few $1,000s. Okay, and I called Jenny, and she said, "Don't worry, I will take care of it." But she gave me a good advice: pay them. Then, when they realize it's a mistake, they will give you back the money. That's no problem, with small interests, but still, okay. So again, show goodwill. I pay them. Then they realized there was a mistake, and Jenny took care of it. She's the one who called at Canada Revenue Agency, where you wait about 45 minutes before to get an answer. But she discussed with them, everything was clear, and after, I got my money back, and everything was fine. So that's there's some accountant, they could say, yeah, sure, I'm going to call, but that's going to cost you $75 an hour. So and that's why each time I pay Jenny, every year it's a little increase in her fee, but I never said anything. I never, hey, it's this much more, no problem at all. I never discuss her fee. It's how much it is, this amount, thank you very much. But when you need her, she's there.
That's awesome.
Yeah.
That's awesome. All right, Bernard, thank you so much. Any comments, questions about any of that?
Hey, Ray, along what we just heard from him, I agree with Bernard. I've been doing my taxes with somebody here for years, even though they were so simple. I just wanted to build up the relationship in case I ever really needed a CPA.
Mm-hmm.
And so I talked to him about some of this stuff over the summer, and he said similar things to what you're telling us. He said, you should just start off as a sole proprietor. I'll help you with the deductions for the home office and buying the new monitor and all that stuff. But when you really start getting going, which you should prove out under a sole proprietorship, then we can do the LLC, because why would you want to pay for more processing? Why would you want to pay more for my time if you don't need to? Mm-hmm. So I think it's worth it to have him do my taxes every year, even though I could probably do them because I'm so simple with my needs. But now I have someone to help me start up a business if I need to. So I think finding someone good like that is always worth doing for any profession that you might consult.
It's true. Someone knowledgeable, because everyone knows everything. Yeah. You ask people, do you know how to start a business? Yeah, but they, I don't know. Sometimes they don't know. They say they know, but they don't know, and you realize it's too late. But anyway, that's another topic.
All right, sounds good. All right, let's go back to talk about a couple other things then. do you need insurance? Well, the risks are low, so you probably wouldn't choose to buy it yourself. A big client may require you to have it. Once again, they're trying to limit their liability, so they may say you've got to carry a policy. You have to at least have $1 million limit for data protection or other areas. Yeah, and there's general liability, there's professional liability where you make it's called errors and omissions. So you may be required to buy it because research has low risk. The premiums are not that high. So even if you are required to purchase a policy, it probably won't be that expensive. Okay. Well, we sort of stopped and had this discussion already. Which entity is best for you? Do you have liability concerns? So I'm interested if you have liability concerns. Does anybody have a business name that they've either chosen or want to do business under? Reem, I just saw you nod, no?
Raman?
Yeah.
Excuse me, I don't understand your question. A name of a business, and what was that?
Yeah, you, Bernard, what's the name of your corporation?
Oh, it's a number. I never found the name. Silly me. I know, but it's 6 number Ontario Incorporated. Sorry, I should have found the name, and I never did that. You see, I didn't even learn the title, but the number. Yeah.
Okay, not terribly creative there, Bernard, but
That's true. That's true. I got it, but I need to correct this thing.
You got the job done.
Yeah.
Okay, so any other questions or things people want to discuss regarding entity, taxes, liabilities, insurance?
I have a question for Bernard.
Okay.
I'm wondering
Hi.
why in Ontario and not in Quebec or federal that you incorporated?
Oh, no, I used to live in Ontario. So,
Okay.
and I did my freelance work in Ontario. And I had an offer in Quebec City. It was full time, and okay, sure, I accepted. So then I put aside the company for a while. I've been away from Quebec for many, many years. So thought, okay. But home is where I live. So but it's all right.
Okay, thank you.
Welcome.
Okay, Reem, I see your comment in the chat. You've been afraid of all the overhead. Maybe that's in corporate overhead or also just the overhead of being an independent contractor?
Yeah, both. And
Okay.
having to track everything and so on. So like, is there an accounting software? Is it worth using one? How do people do that?
Next, our last session is all about accounting, bookkeeping. So let's address it then. But it's probably simpler than you think. A research business is quite a simple business. There's not very much income. There are not a lot of sources of income, and it depends on how you handle expenses, but it's a pretty simple business. It's not complex to track. Unlike, say, a retail store where you have a bunch of transactions every day. That's complex. All right, so let's.
If I can, if I may, I did keep, some, like I didn't have this much bill, a bus pass, monthly pass in Toronto, and she also suggests. She said, you should make a gift to, as a company person, you can make gift to your customer. So I went to the LCBO, that's the SAQ in Toronto, and I make a gift to myself for a bottle of wine, for example. This is deductible. What else? Cable, home, because I work from home. So Rogers cable at the time, my phone and everything. So yeah.
Okay, awesome.
Mostly.
Right.
You can accumulate a lot of restaurant thing, but you need to be ready to answer or justify at any time. Somebody can call you and say, okay, you have 800 bill of restaurant, so tell us about it. So I'm not good at that. I didn't go on.
Okay. Okay. All right, onward. Let's talk, we're going to shift to talking about contracts for a bit here. So would you ever work without one? I mean, most people would say no, that's got to be like rule one is never start work without a contract. And I think that's a good general rule. However, the reality is big companies can be extremely slow to approve a contract. And so they may say, look, we've got this research project, we want you to start in a few weeks, but the contract may take longer to approve. Then what? What would you do? I mean, if you know the manager, if you trust them, if you've reached an agreement, in other words, it's very clear your rate, what you're providing, maybe you would proceed. In other words, if they need your work now and it's going to fall apart while you wait for the contract, I would start the work, trusting the manager. You know, if he says, look, it's approved, it's going through legal, it's, you know, but we're willing to pay your rate and you're approved for this 200 hours, you know, I would probably start. You know, I wouldn't do that long term, but I would do it for a couple of weeks if I had to. Okay, so more about contracts. So two kinds of contracts. One is I'm fee for services, which is I'm basically working on an hourly basis doing this work. And I'm going to summarize my hours and I'm going to bill. Most common is bill once a month, but I'm going to encourage you to bill more often than that, either weekly or every 2 weeks. And then, you know, what are the terms that you want to put in this agreement? We have an attorney, our guest is an attorney, and he'll talk about all of this stuff, but he talks about the importance of that if they don't dispute your invoice within 30 days, it's considered valid. They can't dispute it after 30 days. An attorney fee provision, which says if there's a lawsuit, whoever loses pays both parties fees. Venue, you just talk about which laws, whose laws you're using. I guess that's most important. If you're Canadian and working with the US, is it based on US law or Canadian law? Limitation of liability, that's an issue he goes into as well. But okay, so this kind of agreement, you're just working hourly. It's kind of a simple agreement, but basically, because you just say, well, based on how many hours, that's how much I've charged. The greater complexity is, for example, a master services agreement, and then you provide a statement of work or SOW for each project that you do. Now, typically, these are fixed bid projects. So you're saying, I'll do all of this for $10,000 or $20,000 or $50,000, whatever it is. So you have to very carefully enumerate the scope of the project, the tasks, the deliverables. Now it's important to know who's recruiting the participants, who's providing the software, just all the details of the project. Because if it's a flat fee, you do not want, and you've already said, I'm just charging 20,000. You don't want things to creep into that project to erode your profit. Also on a project like this, if it's fixed bid or flat fee, it's wise to ask for a percentage of it up front. In other words, you say, look, the whole thing's 20,000. And when we sign the agreement, I'd like 25% of it right at the beginning before you even start work. It's really awesome. And now you've got $5,000 until you get to that first invoice that you send out and have it paid. By the way, you can ask for more, but that 25% up front, I think, is not too big an ask. Okay, so these two different kinds of agreements. We talked before about should you bill hourly or should you bill on a fixed bid basis. basically this, you can tell how much more complex this is. You have to dive into the nuts and bolts of the contract, of the engagement, and know all of the details in order to provide a fixed bid and protect yourself, protect your profit. So one other thing, if work falls outside of the scope of the project, you want to have, specify an hourly rate so that you'll be compensated for any hours that are outside whatever your original scope was. So generally, starting out as freelancers, I would start out hourly until you learn, till you've done enough projects that you know the things to watch for and to build into the contract. And then you are in a better position to protect yourself. Okay, so how do you get this agreement? Of course, you can have an attorney draft either of these kinds of agreements, and it might cost you a few $100s to do it, or maybe more, but they probably have a boilerplate that they work from. You can also use inexpensive templates, and frankly, I recommend starting that way. This happens to be one site in the US where you can download they let you input all your details and then download an agreement and then use that agreement. And it's, $25 or $50 or something to do this. So that can be a less expensive alternative, especially considering for bigger basically, who's ever bigger, usually their agreement gets signed. So as you submit your agreement, virtually every client is going to be bigger than you, right? You're just one person operating at home. So the likelihood is you're signing their agreement. So you don't necessarily need to invest too much in yours. Of course, you'll submit it, you'll offer it, but it may turn out that you're signing the client's agreement more often. So a little bit about agreements. Any questions about that? All right, I'm going to continue through and then we're going to get to our guest. Here is an area where I actually think, so a lot of the areas of legal, I don't think you ought to put that much attention into because they're just not likely to be a problem. For example, liability, being sued or having insurance, it doesn't come up that often. But this comes up for every contractor, which is how do I protect myself from having problems with collections? So here's a typical scenario. You work for the month of January. You send an invoice, but you don't get around to it till February 15th. Now, you've told them you'll give them 30 days, so it can't be due until March 15th. And then April 1st, they haven't paid and it's overdue and you call for payment. Wow, you've waited so long for your money. I mean, this is a little bit exaggerated scenario, but it's April 1st. You worked and billed for January, but you probably kept working for February and March. So frankly, you've been working about 500 hours now by the time you're calling them about this overdue invoice and asking for payment. What if they didn't pay? You have such a big investment. And so I recommend you not allow that situation to happen. Here's how. Billing often. You don't wait for a full month. You bill more frequently. I would bill every week, especially if you don't know the client or if they're startup, if you're not sure how creditworthy they are. I bill every week. It takes a little bit of time for you to produce each invoice, but look what happens. You bill every week. So let's say you work January 1st through 7th. Now you create the invoice on January 8th. By the way, you're going to trim the days down to 20 instead of 30. And now if it's not paid by the 28th, you're going to call them on the 29th. And now how much were you in if they fail? 30 days. So instead of 3 months, you were just in 1 month. And if you protected yourself. Oh gosh, I forgot to turn my phone off. Sorry about that. Hang on a second. I'm gonna Okay, so embarrassing. Sorry about that. Caller ID, of course, announces the the caller. Okay, so think about this and figure out what works for you. But basically, you just don't want to get overextended into a client that, you may find out, is running out of money and isn't able to pay you. Or so to protect yourself, bill often, collect quickly, and see, and not have a bad experience. Why would a client not pay you? Well, there is the case where they're not happy with the work. There's some disagreement about the work, or they just don't have the money and they'll pay you when they get it. But if they're a startup, they may not get that funding that they're hoping for. It's possible they never intended to pay. Now, this could happen with a client you get online. If it's a local client, it's just not as likely to happen. You probably know them, they know you, but somebody online that you've never met, they've never met you, it's possible that they never intended to pay. So it doesn't happen often, but it's certainly something to protect yourself from. How can you tell the client's running out of money? Well, always be aware of it. Oops, my slide has a typo. Especially for startups, you should just have it in your mind. If you're worried, you can ask for a bigger chunk in advance. Like we talked about asking for 25% in advance. You can say, look, I'd love half up front. Bill weekly, make invoices due in 10 days. Here's another rule: stop working if they stop paying. If they're not able to pay your invoice, your only protection is to stop and wait until they pay. Okay, Bernard, you're talking about a retainer in the chat. Wonderful. Let me just finish up this idea and then Bernard will let you talk about that. So this doesn't happen often, but you may have to engage a lawyer if you have $5,000 or $10,000 that a client hasn't paid for whatever reason. That's a time when a lawyer might be able to help you get paid. Okay, Bernard, let's talk about, do you want to talk about a retainer for a minute?
Okay, yeah. No, I not with every client, but a few clients, I ask a retainer upfront, not that much. I remember for a contract, it was $1,000. Okay, and they say okay, and if they hesitate or that doesn't work, that's a bit of a, to my opinion, a bad sign. Mm-hmm. Because we could be careful, serious people. Oh, okay, there's a retainer right there. Okay, good, you pay for it. I mean, you go see a lawyer, you need to pay, right? You pay right there, and if it keep going, you will need to keep paying. And you go to a restaurant, you need to pay. You go to grocery, you need to pay. So it's just business. So retainer is okay. And I never met, some people can say you don't trust me or something. I don't discuss that. It's not a matters of, this is business. This is how it works, and I need insurance. But this is it. If you need to explain that to a person, I think already it's a bad sign.
Mm-hmm. A warning flag.
Yeah.
Okay, great. So a retainer can be a monthly amount that you have them pay you towards your hours. It doesn't have to be a fixed bid. You still might be billing hourly. So you're just going to say, well, look, here's my hourly rate, and we think I'm going to work, 30 or 50 hours a month. So I just like to set up a retainer. You'll pay me $3,000 a month every month, and at the end of the month, we'll square up. And if it's been I'll bill you for the additional hours beyond 3,000, but we know you'll pay 3,000 every month, and then I can bill you additionally for other hours. So Bernard, that's a great thing to bring up. Thank you for suggesting it. It's another way to do business that lets you get some fixed amount of money out of them, even if it isn't the full amount on a regular basis. A great suggestion. Okay, so any questions here? Because the next step is to introduce our recorded guest, who is John Thompson, a freelance lawyer in New York City, based in New York City. And I connected with him just Googling freelance lawyer. But of course, then you get a lot of lawyers who are freelancing. So I had to try to change the wording, lawyer for freelancers. And somewhere on his website, it says he represents freelancers. And so Google found him. And I was surprised that there were not very many lawyers like him. But he's been awesome. So I've worked with him, and he came on as a guest the last time I ran this series. So I thought I would play his tape, and we'll sort of stop periodically to talk about what he talks about. So I want to segue to doing that. Any questions before we dive into his tape? Okay, I'm gonna stop my share, and then I'm gonna reset up his, and then share again. Okay, good. Okay, can you see John Thompson? Okay, good.
Yes.
So I'll start it here, where he's going to be talking a little bit about entity selection, the differences between entities.
Well, I'll say the first topic that I think, if you're considering setting up your own freelance business, or if you've just left employment and you're going to kind of start to try to make it work on your own, the first issue that a lot of freelancers kind of run into is, or the first question is, whether or not to create any kind of an entity, or whether they can just kind of do business as they are. So for most freelancers, this is going to be a choice between a LLC or what's called a sole prop. It's just a fancy way of saying a sole proprietor, which is kind of your default status under the law. So I always use the example of a lemonade stand. If people just go down to the corner and start selling lemonade, technically, in the eyes of the law, they are sole proprietors. It's kind of what you are automatically if you ever do business just on your own. So there are other corporate entities. There's traditional corporations, and there's a handful of other kind of more exotic ones. But for most freelancers, really the vast majority, the decision will be between an LLC and a sole prop, or just doing business on their own. So when freelancers are kind of considering whether or not they need this, I usually just start with the point that the number one reason to get an LLC is for liability protection. So an LLC gives you something sometimes called the corporate shield, the corporate veil, but it basically gives you the opportunity to put a wall up between your finances and those of your business. And what that can really help you if something goes wrong with the business. Maybe you take on a lot of debt in relation to the business, or maybe you, God forbid, there's some kind of lawsuit and you're facing losing a bunch of money to the business. You can just then walk away from your LLC. And unless there's some kind of deliberate fraud or something like that involved, generally the law will respect that. You're allowed to just kind of leave it. So that's really, in my opinion, the number one reason to get an LLC if that's what you're going to do. There are some other kind of potential benefits. It certainly helps because it makes you look more established, more professional. It shows your clients that you're devoted enough to this that you've bothered to create an LLC. There also can be some tax savings beyond a certain kind of earnings threshold. Yeah, so those are really the big three reasons, but I would say that the main reason the liability shield is really head and shoulders above the other. There are some drawbacks to having an LLC. The main thing is just the administrative stuff. You have to do some filing, some paperwork. You do an additional tax filing, so you have to keep on top of that. Sometimes it's a different deadline, like last year, all the deadlines got pushed back because of COVID, but they weren't changed to the same deadline for LLCs. So it's something you're going to have to manage and keep track of. It can also be kind of expensive in some states. Really, just speaking of California, it's like $800 a year. In most other states, it's significantly cheaper than that. But I think depending on how much money you're earning, that might really factor into your decision. So before I speak specifically just about this decision in the context of UX researchers, does anyone have any questions?
Jillian says in North Carolina, it costs $145. That's fine. Okay, so he kind of reviewed things we've talked about before, but any thoughts based on what he says there? I'm just going to take a break every time he ask for questions. Okay, if not, you can put it in the chat if there's something. If not, we'll just go on. We'll keep watching.
Awesome. So any questions about entity? This is a great opportunity.
All right, well, I'll kind of,
Sorry.
oh, sorry, go ahead.
No, it's okay. And it's more related to the liability question. Raymond had said a little bit earlier about one liability concern could be non-compete. And I wasn't sure if that was an issue with freelancers or consultants, because especially if you're in an industry, seems like it'd be difficult to get work with other clients if you were locked into like one particular client. Is that more of a full-time employee concern, like non-compete issues?
Yeah, and that's actually, that question is a really good segue to sort of the next topic we're going to talk about, which is, the whole issue of contracts. But non-competes, but if you set up an LLC, you're technically a business, like any other company, and non-competes among businesses are kind of more rare and specific. I mean, when we talk about non-competes, we're probably referring to like what you have to sign as an employee, and that would have to be in your individual capacity. So yeah, it usually, you're not gonna, they're kind of in different worlds, if that makes sense.
Okay, yeah, that's kind of what I was thinking. I just wanted to make sure about that.
Yeah, well, that is a good, as I said, it's sort of a good transition to another big topic here, which is the idea of business conflicts. I know that's something that with UX research and specifically can be really a major concern. And that's just the idea is, are you going to get in any kind of trouble because you worked with company X and then you go work for company Y? The main thing to remember here is that it's all about contracts. There's no real kind of laws about saying, oh, if you work for Pepsi, you can't go work for Coke. In fact, the sort of the policy of courts and the government, they actually want to encourage that. They don't want people to be all tied up by these employment restrictions. That said, a certain amount is allowed in contracts. So if you agree to it in your employment contract, you might be restricted for a period of usually like a year, maybe 2 years, or in extreme cases, 3 years. So when you're kind of thinking about, is this something you need to worry about? The key is just to like know what contracts you need to look at and then really reviewing them on your own. And it's not something you necessarily need a lawyer to help with. You might just have to drink a strong cup of coffee and take out that employment contract that you signed 2 years ago and really kind of just slog through it and see if there's a provision in there. And there's kind of 4 big clauses that you're going to look for. One is a no conflicts provision. And what that basically just says is, you're not allowed to, while you're working at a particular company, you can't do anything on the side that would conflict with that company. So while you're working for Coke, you can't get a side gig with Pepsi. And the nice thing about that is it ends when you leave your job. So it's not really something you have to worry about once you've left that job. But that's one thing. The other is non-solicitation, which sort of applies to whether you're trying to take clients away from your employer or maybe employees. So solicitation is sort of the idea of, you're leaving and you're saying, hey, come work with me, or let me work for you on my own, or something like that. So those are pretty common. And they kind of work like non-competes. The next one, of course, is non-compete. The non-compete is different than non-solicitation. They're similar, but it just says, you're not going to go work for our competitors. So it's more specific. It doesn't really apply if you're taking away an employee or maybe a coworker you work with. So non-solicitation is kind of a broader concept. And then the 4th is the non-disclosure, which is just a confidentiality agreement. So those are kind of the 4 things. And those actually, they seem like they might be totally different, but if you're kind of, let's say you moved on from a company, you're thinking about doing some work for another company in the same space, you kind of have to think about more than just the non-competition. It might be, the non-solicitation. So you're saying, is this company that I'm about to do some work for, do I know them because of my last job? Maybe they were just a vendor or a subcontractor or a client of your former employer. That's still something you have to sort of figure out whether you're going to breach that. And then the non-disclosure too, that seems like it shouldn't really matter, right? You're not thinking about disclosing anything in particular, but you do have to ask yourself, with whatever I'm going to do on this new opportunity, am I using anything? Do I need really particularized knowledge that I have from my past job where I could be in a situation where my former employer is kind of uncomfortable, maybe even accusing you of using stuff that was confidential that wasn't supposed to be used? That was a lot. I should probably take another break and see if anyone has any questions on that.
Let's us take a break because he brought up a few terrific issues here. This whole idea of if you're working for one company, who can you not work for outside of that company? So this is worth talking about a little bit. Reem, any questions or thoughts?
Yes, like for example, I've been working on social media, researching social media functionality. So if I take a contract, for example, at Facebook, and then I get another contract at Pinterest, is there going to be a problem there? I would imagine not, because that's how I make my living, but still, it's a question that comes up in my mind.
Well, okay, so the point he clarified was if you're an employee, you're restricted. So if you were an employee of Facebook, no, you couldn't go, you probably wouldn't want to go work for their direct competitors. And you'd have to look at your employment agreement because it might specifically restrict you from doing that. But if you're a freelancer, if you're an independent contractor, then one company does not necessarily have control over your work, and you just need to be clear in your contracts with them that you're free to go work for any others. Now, then it becomes the NDA. Of course, you're going to sign a non-disclosure in terms of what you've discovered and the things that you're working with one client. And that's probably the trickiest part, which he just ended with, which is be mindful, is there anything that I'm doing at Pinterest that would make Facebook uncomfortable, any findings there, or, so that's that. The non-disclosure is the bigger part for freelancers, because there's no longer non-compete, because that's for employees. It says you can't go work for somebody else. And I guess it's important to just set that expectation. In other words, when you're contracting with Facebook, for them to know I'm a freelancer, my specialty is social media, I work with a variety of clients, and I'm always seeking new clients in this space.
Thank you. Yeah, that makes sense. That helps.
Great point. Great question.
And if I may add, excuse me, there's also the ethical thing. Let's say I work for all kind of social media, but I have different customer, and there is professional, how do you say that? Secrecy or confidentiality, right? This is like a doctor or like a lawyer. They don't tell about other clients' business to their client. They just say, well, I work for multiple clients. I have multiple patients, and it's all confidential. So there's that this whole aspect. Anyway, it's a small, I think it's a small world. So if you start playing both sides, things like that, people will know. I think I never had that, but I imagine.
Bernard, I think it's a good point. High ethical standards are a great way to operate as an independent contractor, so that each client knows they can trust that the work you did for them stays with them. And yes, you'll work with competitors, but you're not going to divulge anything that you learn from their users to the next account, which of course can be challenging, because things, certain things, but you, of course, are a professional. You need to be very careful about how you work.
Yeah.
Okay. Let's go on to his next. Let's go on to his next section, unless there are other comments about this. I'd say this is one of the important areas, is this idea of conflicts. And the trickiest thing is when you're employed and working on the side, because as an employee, you owe a duty of care to your employer. He'll use that phrase later in this. And so you can't just work for whoever you want. You may be bound by a contract, and you also have that duty to your employer. Whereas once you're a freelancer and not an employee, you have a lot more latitude. So the people who need to be the most careful are those freelancing on the side who are still employed. Okay, let's take a look again at the next chunk here. Let me see where we are. Okay, let's keep going. Go ahead.
So one of the, I have a couple of questions. Typically, if we're doing research, we often do research for companies across the US. So where if we do an LLC or a corporation, do we have to incorporate where we live?
Yeah, that's a really good question. The short answer is no. No, you can incorporate anywhere. So you can incorporate in Wyoming, just because it's cheap. It only costs $50 to set up an LLC in Wyoming, so it's really cheap. So a lot of people do that. The only problem with that is technically you're supposed to register where you're doing business, and that can cost just as much as setting up the LLC in the first place. So that's one reason that I just recommend usually just do it in whatever state you live in. I think that's for most people, that's going to be sort of just the most tried and true way to do this, the easiest way to do it. Now, that said, I think your question too goes to more than that though, right? Like if you're probably asking, oh, well, if I have my LLC in Idaho, but I have a client in Oregon, do I have to register in Oregon? And with that, there's a lot of gray area. Like, to be honest, a lot of the system came about before we had the internet and before it was so easy to cross state lines to do business. So I can't say it's crystal clear that you don't, there aren't really clear rules right now. States do have rules, but you have 50 different states and 50 sets of rules. But generally, if you're doing a really service-based business like UX researching and you're in one state, you don't really go to the other state physically, I think you're just fine just registering the state where you exist. Because it begs the question of who's really going to who? If you're meeting online, so the most important thing is that as long as you're paying some state, as long as you're declaring your income in a state, you're probably going to be okay.
Yeah, it's like I was looking at, I think, LLCs in Silicon Valley, and often you have to register at the county and sometimes even also the city if you're working out of your home. That gets to be a little fuzzy. And some of the rules, like I was in Mountain View, and some of the rules were so bizarre, like that they limited how many deliveries you could get. But these days with Amazon, just being a regular old person exceeds the number of deliveries. And like you can see, it was like some old rules. You're not setting up, an assembly line in your living room. But
yeah,
I don't know how much flexibility you have about where you register. I had a friend who lived in Mountain View that managed to register in San Jose.
I see.
How do you make those decisions?
It's tough. I mean, there are a lot of sort of, as you say, more municipal level laws about that are not always well-written laws, and it's hard. I will say this though, if this is a situation where it helps you to not be an LLC, if you set up an LLC, it's way more likely you're going to be treated just like any other company, small or large, and a lot of the rules will apply to you. But if you're a sole proprietor, they tend to get a little bit of a pass on a lot of things that an LLC wouldn't, because it's clear that you're just a person at home earning a living just for you. So.
Isn't that an interesting comment? That sometimes as a sole proprietor, you're not held to the same standard as a corporation would. Interesting advantage of keeping small, for as long as you can.
Is that something to factor in when you're deciding whether or not to do an LLC or not in the first place?
And then the difference between an LLC and a corp, like one of the things that confused me about that is the corp pays you, but then you pay taxes on the corp and you pay income taxes. So you're effectively getting taxed twice on that same amount.
Yeah. Being a corporation as a freelancer is really not something I'd recommend, but both from a tax perspective, but also corporations have a lot more documents that you're supposed to do. There's a lot more formalities that you need to comply with as a corporation. So I think it's a very, if you're considering creating a business like a startup and you're going to scale it up and hire people and get investors, then I would recommend a corporation. But if you're comfortable just operating as a freelancer, then an LLC is definitely the way to go. All right. Well, I'll just keep going into our next topic, but if anyone wants to rewind to that, that's totally fine. So the other thing I was going to talk about is collections issues, which doesn't, it's one thing when you're fully employed, that paycheck shows up every week and it doesn't seem like, it's just, you're able to take it for granted, which is nice. But when you become a freelancer, you really have to put a lot more time into the, invoicing and bookkeeping and this kind of thing. So I always like to talk about this because it is incredibly common. No matter who your clients are, you see a lot of people either in bad cases just not getting paid, but more often having to wait a very, very long time to get paid or having to just kind of follow up a lot to get paid. So, I think as you start your freelance business, you'll start to recognize certain kind of red flags, but I really call them yellow flags because you don't want to say no to business just because there's something that you might not, you might have doubts about, but you start to recognize signs of a potential customer that might kind of put you on notice that this is some customer or company that you might have trouble getting your invoices paid for. So one thing is, Raymond and I were talking about this. Startups is, a term used a lot now. Startup could certainly be a big, very well-funded companies, and it could make a great client for you. But, really early stage startups are eventually going to run out of money. Most of them do. And when they do, they're going to leave a lot of unpaid bills. So that's something to factor in. Certainly overseas companies, if you have a client that is in another country and they don't pay you, you don't really have any recourse, any practical recourse. You're probably not going to go hire a Swiss lawyer to sue someone in Switzerland. It's just not going to be worth it. So that's another thing you have to factor in. And then kind of more specific to your industry, you might learn sort of things that'll put you on notice that it might be harder to get paid. Now, in terms of what you can do to really get ahead of the ball on this and cover yourself, I always recommend just being very professional and organized with your invoicing. A lot of freelancers make the mistake. They're kind of very laid back about it. They focus on the work, which is totally respectable, but it comes at a real cost if they're not sending sort of invoices at clear intervals. That's something that can really cause problems. If you send a client an invoice just once every 3 months, then they might really get sticker shock, and that's going to kind of create a tension. So, you want to pick an interval, either twice monthly or maybe monthly is the most common, or every other monthly. But you pick that interval, and then you really want to try and stick to it, and have sort of a system and be very rigorous about it. Because the more organized you are, your clients will see that, they'll appreciate it, but they'll also know that they have to respect your system, and they'll get them to pay. So. Another thing is, and we'll talk about this a little later, is certain contract terms that you can have in your standard agreement or that you kind of bargain for that can really help you to get paid if you're in a situation where you really need to press someone to pay your invoices. Does anyone have any questions about that topic specifically?
Or for the contracts, do you have a standard or boilerplate contract that you like, or a site or a source?
I guess I would say I don't. Maybe I could talk to Raymond about trying to circulate one. I do have one, or I have a lot of examples. So yeah, that's a good idea. Maybe we can follow up on that.
And freelancers are on that line of not having very much money, but clearly needing legal advice. So when's the best time to get a lawyer involved?
I think if you have an invoice that's more than 5,000 or 10,000, it might not be, and you really cannot get paid, and you really just don't think you're going to get paid otherwise, then I think it's worth calling around and trying to find an affordable lawyer, and really emphasis on affordable. But I think that makes sense. I mean, if that's what it comes down to, then you don't have any other choice. But yeah, it can still be, it's not like that's necessarily too small for a lawyer to spend some time on.
And I say you don't have to call around. John would be an excellent choice to represent you as a freelancer to collect from your client.
Well, I appreciate that. Although you do, I think it's important to find someone local, because I'm licensed in New York. I'm not allowed to go suing people in, all 50 states. So in terms of disputes, it's always good to have someone local, because they're going to be able to do it locally.
Well, that brings up a question I've had for a while here. If you're working with someone out of state and there is a dispute, which state takes precedence when it comes to enforcing your contract or your payment clauses and what have you? Are you required? Do they have to go by the rules of your state because you're the one that gave them the contract and set up the terms, or do they have to? Are you stuck with wherever they're located?
Yeah, that's a great question. And that comes up all the time. And it really is unfortunate, because there's two sides, and they want a resolution to their dispute. But before they can even start talking about that, they're fighting about where it's going to be, spending way too much time and money trying to sort that out. So yeah, that's a great question. And the truth is, honestly, if it's not written in your contract, then there's no default rule. So you can get into a situation where neither side really knows for sure what law is going to apply. And the judge is having to do this complicated analysis to decide which state's laws are going to apply. So that's a really bad situation. And for that reason, any good contract, and probably any contract any of your clients give you, is going to designate what law applies. So it's just a really important contract term. And honestly, some people will do this complicated analysis of which state's law would favor me more. That's kind of hard to figure out. I mean, there's just so many factors, and you don't know when you're drafting the contract what the dispute is even going to be about. I would just say, you just make sure that the contract, everyone agrees that this is the law that applies, and this is where we would resolve any dispute. Yeah. And that's actually another good sort of segue into kind of the next section I was going to get into, which is, the topic of contracts. If you're a freelancer and you're starting out, you're either going to have to start getting familiar with looking at a lot of contracts from your customers, or they're going to ask you for a contract. They're going to say, where do I sign? So either way, it's something you want to really get comfortable with and be familiar with. I think the best analogy for the importance of this is good fences make good neighbors. You know, it's not just about kind of the worst case scenario. It really is about getting on the same page with your new client. And it's a great way to keep them happy and keep yourself happy. You know, you want to really, a contract forces both sides to get aligned about what is expected and what will be paid for it and when it will be done. And that is sort of a recipe for a good relationship. Whereas, you know, if you're just trying to avoid this boring conversation about what the contract says, oftentimes it will sort of lead to problems down the road because people just can have very different ideas about different things. So that's why you need a contract.
That's an awesome point, isn't it? The contract just aligns your expectations. So that's part of the process of negotiating. It's a really good point from a lawyer, I think.
Now, for UX researchers, the big question is, do you want hourly or do you want fixed bid? I think those are kind of the most common. I know that having talked to Raymond about this, he really recommends that freelancers start, or freelance UX researchers start hourly, just because it's a lot easier in terms of getting that contract done. It's just a lot simpler. You know, all you have to do is track your time and submit that time, and there's not a lot more to it than that. With a fixed bid contract, you really have to make sure that that contract is defining what they call the scope of work, which is, it can be a lot harder than it sounds to really say, you know, this is what I'm going to do. This is how much time I'm going to spend. This is what will be involved. And then sort of maintaining that boundary can be really difficult too. So if you sort of are not as specific as you want it to be about the scope of work, you might find yourself having to do a lot of work you really didn't intend to do, just because that's the only way to keep your client happy, because they kind of had a more generous interpretation of what the scope of work was. And then in terms of just, aside from defining the rate of pay and scope of work, there are all kinds of other things you see in a contract. A lot of them are sort of boilerplate things that go into a contract just because they help lawyers and judges figure stuff out. But honestly, they're not mission critical. There are 4 provisions that I always recommend people, freelancers, whoever, get in the contract. One is the venue one you mentioned. So, or it's called venue or choice of law, which is the idea that the contract should just pick a state, and that's the state where we're going to settle any dispute, and that's the law that's going to apply. The second one is a limitation on liability. So this can be really helpful if something really bad happens that you never expected to happen, but you're getting accused of sort of losing data, which then sort of cascaded so that something else bad happened, and all this bad stuff happened, and it's all attributable to something you did, and you're getting accused of, you're sort of asked to take responsibility for all of that. So the limitation on liability can say that, you know, you're not really responsible for anything more than whatever you've been paid. And that can really, really save you a lot of trouble in a lawsuit, if that happens, God forbid. The other, sorry, go ahead. Yeah.
I was gonna say, with that, what does it technically, or what is like the actual outworking of you're not responsible for any more than you've been paid? So say you do lose data on, and you've collected data on, like, I don't know, 15 users or whatever, and you lose all that data. Is that basically saying, like, anything downstream from that you're not responsible for? You're only responsible for the fact that you've lost the 15 users or 15 participants data, not the fact, I don't know what, it's hard for me to kind of envision what could, like, catastrophically cascade from that. But yeah, how can you talk a bit more about that before we go into that?
Yeah, absolutely. Lawyers call it the concept of consequential damages. So it's sort of like, if you hire someone to like park your car, but then they crash the car, they're going to expect to have to pay for the car. But what if you tell them you had an ancient Fabergé egg in the trunk and it smashed? Like, they didn't really expect that there would be it's not really fair to ask them to, so it's kind of that idea. And you can have a provision in the contract that says you're not responsible for consequential damages. But even better than that, you can have one that basically says, look, if you're going to give me $5,000 to do this project, and as something goes really bad, I'll give you all the money back, but that's it. I can't, if you're having me do something that's with extremely sensitive work, I can't be held responsible for millions of dollars, you know.
I have an example that might be helpful. I used to contract with the banks and do user research, and there was a concept of always having to be super careful with the customer's private information, whether it was, you know, their bank account numbers or their passwords or anything like that. So if there was like a breach of security and that information got out in public, if they wanted to attribute it back to me, if I was a freelancer there, I could see where that would be very consequential damages and everything. And I'm not sure, I'm not responsible for more than they would probably cover it, but I would think that that would be something that would be research related that could wind up being a legal problem. So yeah, there are always really strict laws around that type of information, you know, the customer's private, you know, banking information.
Yeah, absolutely. And that's an excellent example. I mean, the data thing, you could be hacked tomorrow, you know, without having done really anything wrong, but you know, you shouldn't have to. You're doing your business. If there's anything that your clients have that's so secret or important, you know, then they should be taking their own precautions, and they can't ask you to kind of be the underwriter for anything that could go wrong. Yeah. So those are things kind of on the, I guess I was going through the 4 contract terms that I think are particularly important. And there's a limitation on liability, that choosing the venue in which law applies. There's 2 more I recommend that are back more on the collection side that will just really help you if you cannot get your client to pay for what you've done, the work you've done. One is an attorney's fees provision. So in the United States, the default rule is everybody pays their own attorney's fees, and it's, you know, it's just not cheap at all. It can totally overshadow whatever the dispute is. Maybe you have an open and shut case for $5,000. If you have to pay to go all the way to trial, it's just not going to be worth it. So having that attorney's fees provision can really change the game, and they're enforceable in all 50 states. So you can put it in your contract and just say, look, if you don't pay me and I have to sue you for it, then I'm going to get attorney's fees. And I could, you know, I kind of wish I brought samples of these. I can maybe follow up or something to provide samples of what these provisions look like. But it basically says if any side sues the other, then the prevailing party gets attorney's fees. Or sometimes it says that, you know, if a contractor has to sue for unpaid invoices, they get attorney's fees. So both of them can be really helpful. Although the first one can kind of work against you if something goes wrong, and you know, there might be a good case against you. It could cut both ways, basically. The other provision, which I think is less commonly talked about, that can really help you get paid, is a provision that says if your client doesn't dispute your invoices within a certain amount of time, then any dispute is waived. Because that is a very common thing. You have, you know, a business is going through a really tough time. They're having a cash flow crisis, as they say. Basically, the business has no money. And then maybe they haven't paid you in several months, and they haven't complained about your invoices, but you just haven't gotten paid. And when you really start to pressure them, or maybe you hire a lawyer, suddenly they start scrutinizing the invoice like crazy and saying, well, what's this and what's that? So that is sadly a very common sort of defense strategy. So this provision in your contracts can really, deter that kind of behavior, because basically it said that if they didn't bring something up, if they bring some issue up within 14 days, say, then the issues can't be litigated. Basically, it's just so, and that can actually make a difference in the court case.
Okay, turns out we're a bit over time already, so I don't want to go too much longer. We intend to post this whole video, his video separately, John's, so that you can go review it if you want. But I feel like he hit the main points that he was going to hit in the session. But you can see he's a pro, and it's awesome to have his perspective on, you know, different things for freelancers. So let me just ask as we're closing, any final questions, points of discussion for us to talk about. So I guess feel free to chime in if you do have something. And I'm just going to go back to my slides, and I think I have just a wrap-up slide here that I want to that'll help us remember what we have to do to finish up. Okay, so let me just share this screen. Okay, so here's what I recommend. Take a shot at that RFP, at doing your first proposal, and come with a number next week, as well as anything else. And hopefully you're willing to share, and we could just look at what different people came up with. And then, of course, I have 2 real freelancers and what they came up with, and you can compare. Keep working on your freelancing plan, your LinkedIn, your case studies, and the video script. I think that's it for this month.